markets from their peak are at the peak, and for the last 1 year, they've given about 29% return on the headline Nifty, which is the largest index, 29%. But the great part is that last year, same time, if you looked at the earnings of FY23, the earnings were 819 rupees, give or take. Today, the earnings for the last financial year of Nifty has been 1,045. So that has also moved up about 28-29%. So from a PE standpoint, Nifty hasn't moved too much. It was 22.7 trailing PE. Today, it's at 22.5. So the Ps haven't moved in spite of the markets being at the peak, which is getting a little unnoticed because the price is a very optically visible variable. That's point one. Point two, I think the domestic liquidity is going to continue because the SIP numbers, which are systematic investment plans coming from the lower strata of India, is coming on the back of education rather than greed this time around, because last 10 years, SEBI has mandated mutual fund companies to spend close to 1,000 crores as we speak in one financial year. That's more than $100 million to be spent on investor education. So that's point two. Point three, this financial year, the election, before the election, the FII went very light. They were net sellers of $4 billion. The call we had was in the June expiry, that number will become positive. So that reverse trade is playing out beautifully. So the FIIs have bought in about $3.5 billion as we speak, and today is the expiry. So I think that $4 billion will get reversed in this expiry itself. And that has created certain degree of momentum. And the FII long positions have moved from 14% in the index futures to almost 82%. So I think the momentum should continue with some small little corrections, which is a part of the market.
You're saying 14 as in 14% to 82%?
Yes, absolutely.
And so how much upside does that translate into at a time when we're already at record levels?
Tanvi, very valid question. This is a great barometer of a market reversal. For the last 11 times when this index has, whether the index futures long or short positions have crossed 80%, the markets tend to start taking a breather and take a reversal from there. On 31st May, the index future long positions of FII vis-a-vis the short position was 14.1%. As we speak, that is the last Friday number, was about 13%, 81% long, and yesterday's number is 82% long. This implies that there's not too much headroom for a rally because of short covering. But I think the index movements in terms of the MSCI is going to give in some degree of push from yesterday. The HDFC news, of course, you've also spoken of.